We're speaking once again with Kiran Morzaria, Chief Executive at AIM-listed Cadence Minerals, EPIC code KDNC. A major step forward has been announced by the company this week, of course, with news that heads of terms have been signed for a $4.6 million funding package to finance the restart of the Azteca Plant at the Amapa iron ore project in Brazil, and also, of course, provide some working capital too. Hello again, Kiran. We've spoken a lot recently. How are you?
I'm very well. You? Great to be back.
Very good. Thanks. Good to have you back. Well, of course, we spoke a few weeks back about the 37% reduction in mining costs at Amapa, and of course, the recommissioning of the Azteca plant. But our met in the news today probably feels like the biggest step forward since Cadence first acquired Amapa. Can you talk us through today's announcement?
So today's heads of terms is a landmark for us. We've secured a conditional 4.66 million prepayment offtake, which will fund the licensing, refurbishment and restart of the Azteca plant. Importantly, this funding is structured so that Cadence only contributes 10 to 15% of the package, but we share fully in the returns. And based on those current assumptions, that equates to an attractive about 70% IRR on our share. In short, it gets Azteca back online, cash flow positive from the first shipment, and provides a strong financial bridge to the larger 5.5 million tonne Amapa project.
Well, of course, as you've just outlined, Azteca is forecast to be cash flow positive from the first shipment. Based on current iron ore market prices at $120 per tonne, Azteca should generate something in the region of $40 per tonne of profit margin. Can you provide further details on the numbers for investors here?
Yeah, absolutely. So that $40 per margin is sort of the gross margin prior to any financing costs. But over the first 3 years, Azteca is expected to produce about 1.15 million tonnes of 65% Fe concentrate. That's roughly about 380,000 tonnes per year. And as you pointed out, at US dollars, $120 iron ore price, that equates to around $126 million of gross revenue, which is about 32 million in free cash flow to equity holders and an NPV of $26 million. For Cadence specifically, there are two layers to the benefit of this cash flow. First, we earn a direct interest from our share of the offtake prepayment structure, which, as I said before, is expected to deliver about 70% IRR. And second, the cash flow generated from the Azteca operation themselves is to be reinvested into Amapa, the larger Amapa project, funding the working capital, operations, maintenance, and the definitive feasibility study. That means that we're not having to put in further Cadence equity funding to keep Amapa moving forward. In effect, we're getting immediate cash returns plus a self-funding mechanism to advance the larger project.
Okay. So as you said, the production revenues from Azteca will go towards fast tracking the recommissioning of Amapa. Now, of course, you still require installation licenses and final permits. Can you give us a feel on time frame for those?
Well, yeah. So the time frame at the moment, I think, as I've outlined in the RNS, is, well, the structure is designed with that in mind. So the structure, once completed, will provide the funding to complete the installation licenses for mining. So, and that will actually include the rail as well. But it will provide that structure in that will allow us to do take about 2 months to do the remaining work, which is in essence doing the archaeological study, and secondly, a couple of design works on the water reticulation and sewage plant. And then we estimate after that's been submitted, it takes 2 months for the government to approve that, whether it be at federal or state level SEMA. And so from that point, from those 4 months, we can then start the installation of the Azteca plant, which is around a 3-month timeline to get that Azteca plant up and running.
Okay, so realistically, from this point, we're looking Q1 next year?
Yeah, assuming that once we get the funding arranged, that's the time that we can start the clock ticking on that timeline.
Okay, excellent. So further down the road, of course, you're generating $380,000 per year from Azteca. How How long after that, once you've got the permits in place, the installation licenses in place, how long after that can we expect to see Amapa itself, and of course the archaeological study, uh, how long after that can we expect to see Amapa itself rolled into production or first production?
So yeah, it's not $380,000. It's $32 million of free cash flow from the Azteca plant, and that also only assumes that's for 3 years. There is a possibility that Azteca plant, Azteca deposit can be larger. So it comes from the Dike 5. It's partly processed material, so that could be enlarged further, maybe up to 4 million tons. But at the moment, we're being conservative. So that cash flow is really there for the DFS and can provide part of if iron ore prices stay at these prices, can provide the equity portion of the actual development of the full Amapa project on a staged development program. I mean, it's hard to tell exactly what timeline we'd commit to at this point in time, but ultimately, what we've got to do is get Azteca running, see that fresh free cash flow coming in, fund the DFS, which is around a 9-month process, and then from there we can then look at construction, financing, and construction of the project. That's of course, if something else doesn't come along in the background, which we've always talked about, a JV or a big brother coming along to help us develop this project, which could shorten the timeline further. But yeah, so at the moment the focus is Azteca getting the DFS, and the rest will flow from that for the development of the much larger project, the 5.5 million ton project, which has got an NPV of 1.9 billion, which is clearly not reflected in Cadence's share price at the moment.
Well, that's it, Karen. I think that's the exciting thing for investors, the potential upside here, because clearly, given where the market capitalization is at the moment, there is an awful lot to come. And of course, Cadence isn't just about Amapa and Azteca. You've got other projects. You have Evergreen Lithium, which of course has started exploration at the Leonora Goldfields project in Australia. Can you provide any updates from the Evergreen investment and also, of course, Sonora Lithium?
So at the moment, Evergreen have just publicised that they're carrying on with their exploration in Leonora, which is prospective for both lithium and gold. With gold trading at above $2,500 an ounce, it's a very supportive environment. And Western Australia has one of the strongest mining jurisdictions globally. And while Azteca and Amapa are clearly our near-term value drivers, Evergreen gives us a shareholder's exposure to upside in both lithium and gold. So that's really positive for us in the longer term. In relation to Sonora, what we're in essence doing there, obviously the Mexican government viewed lithium as a strategic mineral and basically appropriated the licenses. So we're going through an international court of arbitration to effectively get our compensation or the licenses back. So that's a longer term process, but nonetheless, we'll feel very confident that we'll be able to win that case.
Kiran, before we go, are there any other developments that investors should look out for in the run up to first production?
Absolutely. So the first thing is getting the agreement in final form with it executed, and that means we have the funding in the bank. Then it will be the completion of the licensing steps I mentioned. Thirdly, the refurbishment program at Azteca, which we'll keep the market updated on. I'll be doing plenty of side visits, videos showing how things are going. And third, the progress in the DFS for the full 5.5 Amapa project. Alongside that, investors should keep an eye out for any of Evergreen's exploration results, which could add some value and given the strength of gold. So those are the three, those are the main areas to look at. So to summarize, for the Azteca project, Cadence benefits twice over. We get immediate cash flow from our share of the offtake agreement, and then the Azteca plant itself generates surplus free cash flow that is recycled straight back into Amapa. That structure means that we don't anticipate Cadence having to fund the Amapa project, yet we're still advancing this project through DFS for effectively free. Add that to the NPV event, 26 million of just the Azteca plant, plus the 1.9 billion of the Amapa project, you can see the strength of the model. So we combine near-term cash flow, a clear pathway to a world-class iron ore asset, and a diversification through evergreen and Sonoria through lithium and gold. I think that's a very attractive proposition.
Well, we wish you every success in bringing Azteca online, and of course, fast-tracking the restart at Amapa. Kiran Morzaria, Chief Executive at Cadence Minerals, thanks once again for joining us today.
You're welcome anytime.